Okay, quick interruption of the broadcast from your boy mentfx. What's going on, guys? A very quick announcement. Mentfunding has just increased its drawdown from 5 to 6%, and it is no longer trailing. It is now a static drawdown that is static from the original balance down. So that means that it no longer moves up and it's increased. And not only this, but the entire model remains one step with no time limits. It's still no minimum. One day, passing 1 day, you're Bing chilling. Passing 2 years, you're perfectly fine. Customizable options for people that want specific things for their challenge, but 6% non-trailing drawdown now. Check out mentfunding.com, and increased daily loss from 4 to 5%. One of the best models in the industry. We just dropped this update. Definitely check it out. And if you're ready to get funded, that is the place for you. No trailing drawdown, just static from the original balance and does not trail up. Check out mentfunding.com for the best updates and everything you need to know about that. And please enjoy the video. Let's go.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Here's the model. Forever, I've taught you SSC. This is all there is to any good entry. You have a structure, an S&D, and a confirmation within the S&D to then make the move. This will make you a ton of money if you take the time to learn how it works. Phenomenal. SSC is now covered. Okay. Now the model today, very simply, is the following. Assuming you have a higher time frame, bullish SSC that has this portion of the move still delivering, whereas this high has not delivered yet. Okay, very simple. So an example of that before we go further is the current existence of Euro USD and the SSC of its 3-day. What I mean by that is we have a push away. That's a break to the top side. Okay, we have a zone from which that is occurring from, which we've just refined. So we have S, price has come in and is now creating the C move to the top side. And currently we have not delivered to the high, which means that very simply, we have an overall model that is being met and is being delivered to. Phenomenal. Now we have a full understanding as to where price is heading and that we're going to go long. And all we should be doing is looking for reasons to go long. Phenomenal. Now let's step down right back to our lower time frame. So we know that this is happening on a higher time frame. That's your first step of a model. This can help you get funded. This can help you start making money. This can help you start showing you basically how to properly be on the right side. Stop following the other shit out there. Don't pay for another mentorship. Don't pay for another course. Don't pay for my course. It doesn't matter. Okay. Use what I'm sharing today. Utilize it, learn from it. If you want to go deeper, of course, accessibility is there from mentfx.com, but you do not need it. Stop spending unnecessary time and money, wasting yourself on the YouTube videos that are going to teach you to go short in a bullish market. So now you've established the market and the direction of the market. You know, you're in this leg that's looking to take the next high. This is currently happening right now on the 3-day on Euro US dollar. The anticipation is to keep going long. And now, very simply, on a lower time frame, the thing you are looking for, the specific model you're looking for, is price that has begun delivering bullish, and all you're going to wait is for price to re-break bearish. So you're going to wait. Price is going to re-break bearish. Once that occurs, you're going to do one of two things. You're either going to wait for it to reshift bullish and then follow bullish price action to the top side and get entered here, or you're going to step down to a lower time frame and follow the lower time frame SSCs inside of here that are bullish. That's all you're going to do. And your overall targets are going to be these highs and the higher time frame highs, which are likely going to exist somewhere here. That's it. This is all you're going to do. This is the only model, pattern, whatever, that you're ever going to need. This is what I call in the private mentorship as the reaccumulation model. It's understanding that when breaks like these occur, they are part of higher time frame trends. And most likely than not, most traders, smart money as well as retail, are looking to short. This is exactly what has currently happened on the 4-hour multiple times. So this model right here has occurred multiple times now on the 4-hour, which is one of the big reasons me and my team have been able to do very well. So the 3-day is already preset. We know what we're doing on the 3-day and we know where we're delivering to. And on the 4-hour, as we take a look, what do you notice? Price comes in and begins to go long. It's going long and it breaks short. At the point that this market has broken short, everyone in their right mind thinks that they're smart. They understand price is bearish now and it's going bearish, but it's still holding its bullish zone off a higher time frame. So still, this is the target. Price then re-breaks bullish, and from there has a point where that occurs from, and then re-breaks bullish again. So that occurs from this point here. So you could be a bullish trader in here to this next high and then this high. In this case, you would have gotten the delivery of the first and then breaks down. Or here, in which case you get the continuation higher. Phenomenal. Now, what's cool about this move here is that it's also another re-breakdown. So there's a re-break right here. You can see it shown by this free indicator that I've made available to all of you. It's mentfx structure for free on TradingView. So price re-breaks down here, and again, you have one of two options. The first option, like I just shared with you, is to wait for a re-break of the top, thereby making it a new bullish range, bullish, or to follow the lower time frames and see if there's a lower time frame range you can follow on its way up. So very simply, during that time, as it breaks down, all you would have to do is step down, and once again, all you would do from here is follow the new bullish trends and structures in here to the top side. And these are all multi-million, billion, hundreds of $1,000 opportunities, easy opportunities to pass Ment funding challenges, other funding challenges, and whatever else that you may be taking with whatever funding company. Okay, that's this model taking place. Now, if we take a look at the 4 hour, if you wanted to keep waiting, all you would have to do is wait. And as this high gets broken again, notice the new range put in motion. You can see it drawn by the indicator. There's a low right here, and there's a high right here. And from there, all you would have to do is notate the S&D from which it's coming. And as price gets there, you have your confirmation to go long. And you're looking to go long to this point, as we spoke about, and for your higher time frame point, which would be this one. And that is all price is still doing. And now recently, what do you see happen again? Price re-breaks bearish, makes a bearish break. So what do you think you can already do on lower time frames inside of here? That's right, you can follow lower time frame SSCs to the top side, because all we're doing is anticipating the continuation of the move because we already have a higher time frame playing, and now we're getting the model being met. Or you could wait for the break, which is what some people do. And as it broke this, it created a new range from this low to this high. You can see it drawn by the indicator, and thereby you can trade the areas in here to go long. Now, I did personally, and I got a long off this, and now it's coming back, and next week I'll be looking to go long again. And if that wants to re-break down, can any of you guess what I'm going to be doing? I'm either going to be once again waiting for a shift to the top side again to follow longs, or I'm going to wait for it to do whatever the fuck it wants, come into whatever zones it needs to, and then begin the follow long again instead of forcing the shorts. If you put this simple system or this simple methodology into your system right now, you're going to outperform most people in the smart money space and the retail space across the board. Most people, as I spoke about last week and a few weeks ago, are looking to short zones here for no reason, short zones here, likely short here, and everyone wants to go short for no reason. And then left, you got people going to go short here and here, left and right and left and right. Instead, focus on a simple model. And that simple model, as taught to you right now and today, extremely simple if you go and take the time to study it, is find an SSC that's delivering on a higher time frame. Once that is found, as long as it's still delivering, sorry, my tea is going off. I'm going to pause this for 1 second. Okay, we're back. So as long as it's still delivering, you have no reason to look for anything else but the delivery of the continuation to the high without forcing any shorts. And all you want to do is off a lower time frame. So if you're trading a 3-day, you can use a rule of 30 or so, as I teach on the channel. But basically, you want to use a 4 hour, a 1 hour, a 6 hour, 8 hour, maybe a 30-minute at the lowest. You want to use those to find this model. You want to find bullish ranges that re-break bearish, and you instantly assume what I call in the private mentorship the reaccumulation model. All that means is you anticipate that this is going to become a reaccumulation, and you begin to trade within its direction, either through lower time frame SSCs, which will be available inside of right here. So this on a lower time frame will look like this, of course. During any session, you can trade those accordingly, or if they break down, you can wait, same thing. Wait for the break and then begin to trade those accordingly. This is the 3-box system, the SSC system, as I've taught on this channel over and over and over again, which has found and helped a lot of people find consistency in their trading. Or you can wait for that given time frame to break a new high and trade its new zones to continue long. So very simply, based on this market right now, the clear SSC of a higher time frame is to deliver to this high. Has it delivered there yet? No. Therefore, can we follow lower time frames to continue long? Yes. As we jump down to a 4 hour or something of that nature, what has happened? When it broke bearish, what did I tell you guys I did last week? I followed longs in all of these areas and these areas and these areas and these areas. And that's exactly what I've been doing. Why? Because I'm following this exact same model. Price broke down. I anticipate bullishness. Why? The higher time frame is still holding. Nothing to anticipate otherwise. No reason to sell these areas here. Most smart money, most dumb money, most retail, most support resistance, all this fun stuff are going to be looking for any reason to get short here inside of this imbalance. Then as price breaks down again, or even as it comes up, they'll be looking to get short in here. In here, you might as well, you already know most people are looking to go short again this week and next week because of this, etc., etc., etc. There is always a reason, and there's always a zone, there's always an imbalance, there's always an S&D, a supply zone, a block, whatever you want to call it, that you can be trading from. But so because of that, people always find themselves, or most of the time will find themselves on the wrong side, even and especially through like mentorships and stuff and signals, right? Most people are going to be trading this. I don't know if you guys are in a different mentorship, go and find what your mentor has been normally saying. If they've been just long following it like this, phenomenal, stick to that mentor. If on the other hand your mentor has been following any one of these to go shorts potentially, you are in an area where there's a misunderstanding of structure or of trend and of actual orders that are moving price in a given direction, right? So instead of being on the side where you're looking at every single thing like this, as per last video, where if you understand what the other side or what your competition is doing, you put yourself basically, you put yourself above everyone onto the throne, right? So forget this dumb way of trading and focus on this specific model. A higher time frame that's already delivering, a lower time frame that has either rebroken down to keep going long and now you wait for that, or refollowing that lower time frame to start going long again. So with that all in motion, the 3-day wants to deliver to this high. The 4-hour is bullish and still bullish. So next week, you sure as hell know that I'm going to be looking to go bullish off of this. And that's that's all I need. And if price breaks down, all I have to do is walk away, step back until a new range of the top side is put in, and I'm back in the money. And that's all I have to do. So execute this model, use this model. Don't pay me a dime to learn this model. It's in front of you. If you do want to go deeper, it's available in the private mentorship. Otherwise, please unfollow the rest of the stuff out there. Use the stuff presented to you here. It's going to take you a lot further. Stop following the signals that are putting you on the wrong side of price every single week, showing you every zone everywhere. It's not going to teach you anything. There's a big reason that you're stuck making the same mistakes over and over and over again. If you want to break out of that cycle and you're sick of being in that fucking cycle, well, follow a model, not a pattern that's going to make you money. Do that over and over and over again. You're going to learn the specifics behind price action, and you're no longer going to show up every day thinking that price is new and absurd and always is unprecedented and news is going to affect it and you're never going to figure out which way it's going. Instead, you're going to show up every week knowing what price is going to do. And as a result, just to showcase this a little bit further, we've been bullish on this market ever since the tap into here. So for the last 2 months, every day we've shown up to trade, it's been the same thing. We know what our higher time frame is. We know where we're delivering. The simplest way to follow it is to look to go bullish. As we get bullish ranges, if we're on during the time that there's a bullish range that's occurring, we can look to trade it. Otherwise, we walk away from the market. Your ability to do those 3 things, find the higher, follow the higher, stay out when it's not following the higher, is going to do more for you than you're ever going to get paying $5,000 for a course, paying for signals, following signals, and any of that fun shit that won't make you or help you in any way down the line. If you're serious about learning the skill and basically finding consistency in this industry, be ready to put your own time in, be ready to take responsibility for your journey, learn what taking responsibility for it means and looks like. As per my last video, look at what the other side and the competition is doing so you don't fall into the same mistakes. Look at what the mentors that you might have currently, what kind of signals they send out, and if they're in line with the actual delivery of trend, or if it's consistently just go and go and go through every zone they ever had, or if it's a consistent show up every day to do the exact same thing, and there's an actual understanding behind the way that price is moving. And once you've done that, you're going to put yourself on the right side forever. All you have to do going forward is to follow this model right here into any of your trades. Print a map out, stamp this on your head, put this in front of you, start looking for something like this or something that represents this across any and all pairs. It doesn't matter what pairs. When you find it, begin to follow and see how it delivers. And you're going to be ahead of most people that are looking to induce highs and lows, to chalk the flip, to find the channel liquidations, trendline liquidations, whatever it might be, equal highs, equal lows. Instead, focus on the SSC, the at-hand structure, and follow it through on the lower time frames. All right, guys, I hope this helps out. This is the model that I personally follow, that a lot of people that I've taught have followed to pass multiple funded challenges. Again, just because they've done it does not mean that you can do it, but take the time to learn it and you're going to be ahead of most people. Don't get stuck. Thanks, guys.